Hello and welcome. I'm Ryan Hodge, and together with my partner Sandra, we are your licensed real estate brokers here in London, Ontario. I'm pleased to bring you our comprehensive real estate market report for June 2026. June is typically one of the busiest months of the year for real estate, and this June, the data tells a nuanced story, one of steady buyer activity alongside meaningful price corrections that are creating real value for purchasers. Sandra and I are going to walk you through every number. Let's get into it. Starting with our June 2026 overview at a glance. 753 homes sold across London and St. Thomas this month, a modest 1.6% increase compared to June of last year. That is a positive sign that buyer engagement is holding steady. The average sale price, however, came in at $606,614, down 6.7% year over year. New listings were essentially flat at 1,810, up just 0.3% from last year. Active listings climbed to 3,463, a 5.4% increase over last year. This gives us 4.6 months of inventory and a sales to new listings ratio of 41.6%, still firmly in buyer's market territory. Looking at the sales activity picture in historical context, the 753 homes sold in June 2026 is actually a solid result when measured against recent years. June 2025 had 741 sales, June 2024 had 711, and June 2023 had 747. So we are actually seeing a gradual improvement in sales volume over the past 3 years. Going back further, June 2021 saw just 659 sales at the height of the pandemic frenzy. A reminder that even the peak years were not always the highest volume months. The current pace reflects a market that is finding its rhythm, with buyers re-engaging steadily, if not dramatically. Now let's talk about pricing, which is the most significant story in June 2026. The average sale price of $606,614 is down 6.7% from June 2025 and down 10.8% from June 2024. The median price came in at $565,000, down 5% year over year. These are meaningful price corrections, and they represent a genuine improvement in affordability for buyers who have been watching from the sidelines. For the most reliable measure of home values, I always look to the Home Price Index. The composite HPI benchmark for our region in June 2026 stands at $561,100, down 3.5% compared to 12 months ago. The single family benchmark is $613,800, down 3.9% over the year. The townhouse benchmark is $432,900, down 9.3% year over year. The townhouse segment in particular has seen significant value correction, which creates compelling opportunities for buyers in that category. On the supply side, active listings reached 3,463 in June 2026, a 5.4% increase over last year and a 31.9% jump compared to June 2024, when we had just 2,627 active listings. This translates to 4.6 months of inventory. To put that in context, June 2021 had just 0.8 months of inventory at the peak of the market. We have gone from essentially no inventory to nearly 5 months in just 5 years. New listings were virtually flat at 1,810, up just 0.3%, which tells us the supply picture is stable rather than escalating. The sales to new listings ratio of 41.6% confirms that buyers' market conditions persist in June 2026. In June 2025, this ratio was 41.1%, so conditions are essentially unchanged from last year, confirming a stable buyer-leaning environment. A ratio below 45% indicates buyers' market conditions, where new supply is outpacing buyer absorption. Homes are taking a median of 26 days to sell, up from 23 days last year. And the sale to list ratio of 97.8% tells us that sellers are accepting modest discounts from their asking prices. Looking at the year-over-year comparison directly, homes sold rose modestly from 741 to 753, a 1.6% gain. Average price fell from approximately $650,000, $176 to $606,614, a 6.7% decline. Total dollar volume fell 5.1% to $456,780,030. New listings were flat. Active listings rose 5.4% to 3,463. Months of inventory edged up from 4.4 to 4.6. The sales to new listings ratio improved slightly from 41.1 to 41.6%. Median days on market rose from 23 to 26 days, and the sale to list ratio was essentially unchanged at 97.8%. So what does June 2026 mean for buyers? The combination of stable sales activity, meaningful price corrections, and a buyer-leaning market continues to make this an excellent environment for purchasers. With 3,463 active listings, you have abundant choice. The average price is down 6.7% year over year, and the HPI composite benchmark is down 3.5%, meaning you are buying at a genuine discount compared to where values were 12 months ago. The sale to list ratio of 97.8% confirms there is room to negotiate. Sandra and I are seeing buyers who act thoughtfully and decisively in this environment, securing excellent properties at prices that would have been unthinkable 2 years ago. For sellers, June 2026 requires a clear-eyed and strategic approach. The good news is that 753 homes sold this month. Buyers are active. The challenge is that with 3,463 active listings competing for those buyers, your home must stand out on every dimension. Pricing is the most critical factor. The 6.7% average price decline year over year tells us that sellers who are anchoring to last year's values are not achieving their goals. Sellers who price accurately based on current comparable sales, invest in professional presentation, and execute a comprehensive marketing strategy are the ones who are succeeding. Sandra and I are committed to delivering exactly that level of service for every client we work with. Thank you for watching our June 2026 market update. The data shows a market that is active, stable, and continuing to offer genuine value for buyers, while demanding precision and professionalism from sellers. Whether you are looking to buy, sell, or simply stay informed, Sandra and I are here to provide the local expertise and personalized guidance you need. If you want to know what these numbers mean for your specific situation, reach out to us at ryanandsandra.ca or call us at 519-601-1160. We're always happy to talk. Take care, and we look forward to connecting with you soon.